Hi, good morning, everyone. It's Louisa from Canada. It's Wednesday, February 18th, and we have no news, no hardcore news this morning, just soft news, and we have minutes at 2 p.m. Fed minutes at 2 p.m. today. So currently, just looking at the 4 hour here, so we can see that price has really been stuck in a range between this BISI, this SIBI, and this is the higher time frame price range. So here's the swing high, here's the swing low, and we have reached kind of like the 50% of this range, and we're just kind of stuck in between here. So that's kind of where we are. There haven't been a lot of opportunities for me to take a trade. I'm a day trader, and I wait for price to hit those higher time frames before looking for a trade. So that's a little bit about what I trade. And yeah, so that's kind of where we are. We'll take a look at the overnight. The overnight Asia trended. So we have from A to B. This is on the 15-minute. We had London that had a continuation from Asia up into the SIBI. We had an injection of news at 8:30, just soft news. I call it orange folder. It's not red folder news, but still has an impact. And we saw an initial push up before the release of the 8:30 news, just above this SIBI, and then we saw a nice displacement down. Uh, I I normally would be looking for a trade in London overnight, but I'm looking for Asia to range. And when Asia trends from point A to point B, there is little opportunity for me to find such a trade. I like to see Asia range, and then I like to see London take the high or take the low, and then go for opposing liquidity. So that has not happened. And if we look at previous days, same sort of trend. We were trending here in Asia. Here's what I like to see. I like to see accumulation. Now I like to see a manipulation. Then I like to see a move. So the last 2 nights we've had Asia trend. So that has not given me, hey, good morning. Good morning, Janine. So we have not had an overnight of interest to me yet. Morning, Gary. Okay, so that's what happened overnight. So again, we had Asia trend, and then London had a continuation. After news, we had this nice displacement down. We had this nice wick. Let's go down to the 2 minute. I liked this move here, right here. This was an entry model that I would have taken. But again, you know, my trading plan is pretty strict. I don't generally trade pre-market. But this right here would be of interest to me. Why is that? Let me move this out of the way. So we had London, we had this, we had a push higher, then we had price come down, we had a nice push up, and then we had beautiful displacement down. Then we climbed back up into this SIBI here. So that would have been of interest to me right here. And then we can see that price is expanding down. So right here, that's an entry model that would be of interest to me. So at this point, again, if we come back to the higher time frame, we are we've been in this silly tight range. And I think the shorter trades are safer trades. So we're kind of like stuck between here and here. This is where we are. So there hasn't been much opportunity for me. But again, I'm not a scalper, but that's fine. I'm just going to wait for my particular entry models, uh, which is a smart money reversal or continuation from an area of manipulation, and it has to be based in time. So time for me comes before price, and so I'm waiting for injection of uh, volatility into the market at 9:30, and then I'm waiting to see if there's an entry model between 9:45 and 10:15 or 10:45 and 11:15. After that, my day ends, and basically that's when I'm looking for my model. So again, here we are. We've had limited movement in the market, really. So now at 2 o'clock today, we have minutes, Fed minutes. So it's not a meeting or anything, just minutes are posted. People um, read the minutes, absorb them, and then we get a bit of a reaction to them. So again, this is on the 5 minute, nice displacement down from this move up from London, and then a quick wick up into this inverted fair value gap. And here we have a SIBI, so we have change in the state of delivery. We have an SMT, so we can see here that we have a nice SMT between ES. So we have ES here. Let me put this back on there we go. So we have a nice SMT here. So ultimately, I need a change in the state of delivery, SMT. I need an inverted fair value gap and a fair value gap. I want to see price come back into the fair value gap or inverted fair value gap and then move down. So this is my model, but again, I'm waiting for time, and I don't generally trade pre-market. I'm usually out with my dog. So anyway, I just wanted to point this out that this was a possibility. And what I would have looked for Terminus, I would have looked for low of London and left a runner for low of Asia, although that would be a pretty big movement pre-market. So anyway, that's just a little bit about pre-market thoughts, comments. We did take previous day high. Here's previous day high right here. So ES and NQ took previous day high. I don't know why, but sometimes the indicators get knocked out. That's why it's good to put them on your favorites bar. Sometimes they get knocked out. So here's previous day high here on NQ and on ES, previous day high here. So we've taken the previous day high, dropped back into the range, came back into this inverted fair value gap, and then dropped lower. So see again, like there hasn't been huge movement pre-market. The moves tend to be quite stunted. So I will be keeping that in mind for the remainder of this week. It's helpful to recognize the environment in which you're trading. So again, we've had really stunted ranges this past week and last week. So it's just good to recognize what we're trading in. You know, if you can get like a 20 to 50 point move, I think that would be pretty good in this environment. Tomorrow we have, I think it's unemployment. Let's just take a look. Unemployment claims tomorrow at 8:30, so I think tomorrow will be a good day to trade. And then Friday, flash manufacturing, flash services at 9:45. So I'll be looking for a macro at 10:45, something like that. Just want to take a look into next week. Tuesday we have consumer confidence. Monday is no news Monday, so not a great day to trade. Wednesday, not much. Thursday we have unemployment claims. Friday, core PPI. So Wednesday, Thursday, Friday, maybe Tuesday. Wednesday, Thursday, Friday again of next week. It's looking good. Good morning, Polterschnack. It is impossible for me to say your handle without laughing. You must have a good sense of humor. Just taking a look at all three indices. So we've got Dow Jones on the right, we've got NASDAQ and S&P on the left. This is on the 1 hour. SMT divergence between ES and NQ. Good morning, Kalua, Luhao. Okay. I'm just going to go to the higher time frame for those of you that are just joining now. What is happening here? Take this off. So just on the 4 hour, you can see we're in a pretty tight range here. We're between this BISI and price may be looking to reprice into these SIBIs. We still have these SIBIs up here that are untouched, but this is quite a long way up. This was our initial draw on liquidity on the buy side. So this is kind of where we've been hanging out, and it's been pretty limited opportunities. Even when we look at the 4 hour candles, the 4 hours, you know, 2 candles down, 2 candles up, 1 candle down, like it's a difficult environment, I think, to find a decent trade. Again, I'm not talking about scalpers, because scalpers can pretty much find something in any environment, but for my style of trading, I haven't had much opportunity of um, of anything that's really of interest. Hi, Frank. Good morning. Good morning. So this is kind of where we're at. We're stuck between this BISI and this SIBI. So if price moves above this SIBI, then we can perhaps look for a price to reach for something up in this range. If price rejects at 9:30, 10 o'clock from this range, well, then we might be looking at coming a little further down then. So that's kind of where we are. If we look at the 1 hour, again, same thing between this SIBI, this BISI. Anyway, let's see if we can get something. We've taken the previous day. early this morning, both ES and NQ have taken previous day and rejected off of that. So here we've got previous day high, previous day high. So we'll see if this SIBI is going to hold. Again, these are on the hourly. This is what I trade off of, the hourly time frames. So anyway, those are just my observations from this morning. You can see on the 4 hour, we've had a move up and an equal move down. So again, if I find something this morning, I'm going to keep in mind that the range is pretty tight. So I won't be looking, you know, if I can get a 20 or 50 point, I'd be happy with that in this environment. Someone here yesterday, I can't remember who it was, but someone contributed in the chat that we've really been in a range since November. And we can see that clearly if we go to the weekly. So here is December, starting around here, end of October. And this has been a real range. I can't remember who it was. I apologize. If you're in here, definitely take credit for it. But he or she, whatever trader it was, is absolutely right. We've been, look at this tight range. It has been a little bit tough. I found December quite tough to trade. January didn't provide too many opportunities. And here we are. This is the range we're in. So, you know, we have to recognize that. So thank you for that contribution, whoever it was yesterday. For those of us who joined us, this was an opportunity here this morning pre-market. So here we had Asia pushed up, London pushed up. We had a push up here, price came down. It made one last push up. We had nice displacement down and change in the stage delivery. We had an SMT. So you can see here on ES, we've got this SMT. So that was a nice SMT. So when price comes down like this, we can expect it to come back up. In this case, it came back up into the inverted fair value gap, and we had a nice fair value gap here. This is a smart money reversal here. So the entry was off this wick. Now again, this is a big inverted fair value gap, right? So you have to consider risk. And if your entry had been either at the beginning of this inverted fair value gap or at the 50%, you would have been taken out of the trade. So again, we have to consider risk, sizing down. Oh, and by the way, this is a channel. It's for entertainment purposes only. I'm an ICT student. I don't give advice. I'm just sharing in a friendly way what I'm thinking about the charts. This is not a signal service either. Do not copy my trades. You should, and I don't encourage anybody to trade because there's great risk attached. So I just want to put that caveat out there. But even this, like this wick came right back up. So stop loss would have had to have been kind of above here. But what we do have here is why sometimes trading view is kind of ugly. We have a suspension. No, this is not a suspension bridge, but it's a nice steep displacement down, which is good to see. Oh, good morning, XMT. Okay, XMT, let me just read this out. I'm watching the 3 a.m. BISI on what time frame that displaced through the previous day high. So let's go to 3 a.m. The BISI that displaced through. So here's our previous day high. Here is 3 a.m. This candle here is 3 a.m. So this is the BISI that you're talking about, I think. on the 5-minute right here. So price moved up, used this as support, came back, almost used it as support again for the push higher. And this is change in the state of delivery right here. Let me just put that in, change in the state of delivery right here. Price displays down, came back into the fair value gap, inverted fair value gap, and moved down. So XMT, you're saying I want to see that offer resistance back to the Asia low. Yeah. Yeah, that makes sense. If it fails, then higher prices are likely. On the hourly. Let's move to the hourly. Here's our 3 a.m. right here. So this is the 3 a.m. and it's an hourly. So XMT, that sounds reasonable to me. You're looking for this 3 a.m. hourly to be used as resistance. Here's our midnight. Again, I want to see price move well above midnight to look for a sell or well below midnight to look for a buy. This to me, midnight is equilibrium. So at 9:30 when the market opens, and just staying here on the 1 hour, let's just take a look here on the 1 hour. So again, we've got this hourly SIBI, we've got this hourly BISI, the move up, we've got the change in the state of delivery. Let's just put that in. Change in the state of delivery is right here on the hourly. It's important to talk about time frames. Change in the state of delivery on the hourly. We have previous day low down here. Let's go to the 15-minute. We'll just take a look where Asia is. Here's our Asia low. And below Asia low, this area right here is an important area. So if we move below Asia low, again, this is on the 15-minute here, sell side. Potentially a 15-minute. Asia low. This is our week open. Asia low down here. And again, we had this nice push down, but this is London, a nice sweep from London back into the fair value gap and down. So this was displacement, a nice displacement. That's what we want to see. I like to see a displacement so strong that you think you've missed the move. You know, a lot of people panic and they go, wow, I missed the move. But to me, I see that as displacement. And then I want to see price come back up, which it did, and then take the trade from here. A lot of price distortion. Price distortion leading back into this inverted fair value gap. We've got price distortion here around midnight. All of this price distortion here around midnight. I will be very conservative. If I find something this morning, I'll be very conservative because I think the minutes coming out at 2 p.m. I think are quite. Thank you, XMT. That's a good observation. I think the minutes this afternoon. Uh, I think that'll be for anyone who trades the afternoon. And I don't like trading the afternoon, but anyway, let's see. We'll keep an open mind. Here's our XMT 3 a.m. Hourly, and we'll keep an eye on this, see if it rejects. Here's our consequent encroachment. I have a slight bias this morning, just a slight bias to the buy side. I think if price gets above this SIBI, we can look for price to move higher. And if price resists this hourly SIBI and XMT's hourly BISI in here, then we can look for lower prices. But ultimately, if price wants to go higher, it has to manipulate lower first. So that's what I'll be looking for. And I need change in the state of delivery in SMT. So here we have a 90-minute SMT with YM. And other than that, let's just see if a trade comes my way. Last night, 6 p.m. when the markets opened, we had this big push up, and then the next 4-hour candle, excuse me, at let's just see here. This is our 6 a.m. Our 6 a.m. candle swept up here and then pushed right down to where we are. So, we've got balanced price ranges in here. Got this Asia low that's looking quite attractive. This could be consolidation in here for a move lower. And again, we've got weak open here. Currently, we have SMTs on both sides of this range. We have a 90-minute and we have a 90-minute up here. So what I don't want to see is an SMT on both sides. I want to have a very clear manipulation, one-sided SMT, change in the state of delivery, inverted fair value gap, take the trade. That's what I want to see. That's what I'm waiting for. Well, currently here in mid-range Canada, we have the quiet before the storm. It's such a beautiful morning out, like things have started to melt, so it's got to be around 1 to 2 degrees. And then we're about to get hammered by a huge winter ice storm, which is supposed to roll in today. So my dog and I had a great walk this morning, sipping a coffee, but I think that the weather is about to unleash on us. Higher time frame on the weekly, we've got SMT between YM, NQ, and ES here. Just an observation. I'm just going to move to the 1 minute for the open. I'd like to see the first presented fair value gap. So I think we can orient ourselves. So this is our XMT 89's 1 hour 1 hour pissy. This is the SIBI. This was the displacement and then return back into this inverted fair value gap. Okay, so market is about to open. We have just taken London low on both ES and NQ. Continuation down to Asia, potentially. Good morning, Tandy. All the way from Mozambique. I bet your weather is quite nice. So it looks like a continuation. So we had price distortion in here and then a continuation potentially down to Asia low. Hi, good morning, Heat Trader. For sure, it's nice in Miami. just below the week open here. A lot of noise around this level. It's terrible hot here. Please, please. It's terribly hot here too, Tandy. It's 2 degrees, which beats minus 28. I really do want to see it come down and take Asia here. Good morning, Sharka. Quite wiki. No first presented fair value gap yet. Question I ask myself is if I had taken this short, which was a good trade, it just wasn't in um, my macro. Plus, I wasn't here for it. But just hypothetically, if I had taken this short, the question I would ask myself is, would I have stayed in the trade through 9:30 a.m. open? That's always the question, that runs through my mind. Would I have held that? Now, they were not red folder days. And what we can anticipate on non-red folder days is that the 9:30 open generally is a continuation of the manipulation that happened earlier in the morning. So I think, you'd have to have a good enough stop through here. I've done it. It's not something I generally do, but this would have held and maybe put the stop loss maybe at the top of this 3 a.m. hourly busy. Anyway, just something to think about. Oh, you had a Category 5 cyclone 3 days ago? Oh, geez. Town's a hot mess. I bet it is. Sorry to hear that, Tandy. A lot of price distortion. Yeah, that's crazy, Tandy. Really hovering around this level of week open. We can see price distortion through here. Come on, come down and grab Asia. Let's get a nice manipulation. Come on. We have this continuation SMT here from the morning up here. So here's the SMT for this morning's manipulation, and then move down, and this is a continuation. Patience required in this move. Like, look at this on the 1 minute. There's just very few fair value gaps, a lot of price distortion through here, a lot of price distortion through this level. That seems to be the theme of the week. is patience, just patience in the trade. Oh, T-Ship, oh, I hope you're feeling better. I think it was you were there for a couple weeks. I hope you're feeling better. We haven't seen you, so maybe the Wi-Fi at the hospital wasn't good for you, or maybe you weren't feeling up to it, but glad to see you back on your feet, hopefully. Oh, that's great. That's great, Tisha. Hey, Donald. Good morning. Good morning from the weather-friendly Florida. So we finally got a first presented fair value gap on ES. So again, still looking at Asia as possible target for with the main price movement manipulation here from the high of London coming down into this inverted fair value gap. Price distortion leading into the 9:30 open, and then lots of price distortion through here, and looking for this 3 a.m. 1 hour fair value gap to hold. I'd like to see price down to Asia, potentially a smart money reversal, and then a move up. If we look through here on the 1 hour, it's all balanced price range through here. Just a lot of price distortion. This is a 1 hour BISI from yesterday. This is holding. Let's see if this 3 a.m. 3 a.m. hourly can CB holds. This is a change in the state of delivery from this morning's manipulation. And this is the inverted fair value gap. So we have a lot of key levels here. Patience is the name of the game right now. The market wants to lure us in. We did not take Asia low. Back into the 3 a.m. BISI with the 9:45 macro about to start. So for the macros, I either want to see a continuation from an earlier manipulation or I want to see manipulation inside the macro. And again, let's just keep in mind that minutes being released at 2 p.m. is probably causing some of this price distortion this morning. This was the entry from this morning, 8:30. But again, you know, you have to have your rules. I generally don't trade pre-market. This could be a short off of here down to Asia. This is not advice. I don't give advice. I'm just tape reading. Now this is our 4 hour candle. This was the open of the 4 hour candle. So if price was going to go low, we have open, high, low, and then it's going to close somewhere in here because the next candle opens at 10 a.m. Although I'm looking for higher prices, this is not much of a manipulation down here, and there's no SMT. So I still think there's room for movement down before price moves up, potentially. We haven't even had first presented fair value gap on NQ yet. YM took Asia low. Yep, thank you, Labir. So when one of the indices takes a low, the other two do not have to before price can start to move up. That's why we do want to look at all of the indices. Only one has to take the low, and then the other ones can just continue to move up. So that's just, thank you, Lavir. Only bullish SMT is YM. Yeah, yeah. I know. We have a very strong SMT on the top side here. So again, it's just, you know what? Sit back, relax, read the tape, and wait for your setup. Wait for your setup to come to you. This kind of stuff, this is difficult to trade. It's not exceptionally clear which way the market wants to go. So until it tips its hat to us, I'm just chilling out. I'm interested to see if this 1 hour BISI holds. Again, I'd like to see price come down and sweep Asia. I'd like NQ or ES to sweep Asia. And if it rejects off this hourly, it just might do that. Whoa. It's really hugging the midnight. This 1 hour BISI created yesterday. We have an SMT off of it. But just know that when it comes to a smart money reversal, we need to see a change in the state of delivery first. Just seeing an SMT in and of itself means nothing to me. Like it's just one confluence. It doesn't dictate a trade. It doesn't dictate a setup. It's worth observing, but it's not a standalone. See if we come down, take Asia, or if this BISI continues to hold. And right now we're between this 3 hour BISI and this BISI that was created yesterday. Just going to go back to the hourly here. This is the BISI that we're talking about that was created yesterday. So in this price moving up, this is the BISI here. Just below the week open. So it's a seems to be very sensitive area. So we had price movement down, we had great movement up. Excuse me. We had great movement up. So this BISI is holding, and then again, XMT89. This is the 3 a.m. BISI candle here. So we're bobbing between these two areas. So we just wait and see where does price want to manipulate from. Really rejecting from from this level here, this weekly open level and this busy. So just rejecting, rejecting. And as Levere pointed out, YM has taken Asia low. We have an SMT between NQES and YM. If price gets above this 1 hour BISI, and if price shows a willingness to move above here, then we could look at higher prices. At this point, it's a big nothing burger. Back into this hourly BISI. This could potentially, this is 9:30 here, this could potentially be the manipulation. It's just so messy. Okay, moving above this 1 hour. So if we look at this, could be manipulation down here, but again, it's very messy. Let's see if we make it through this inverted fair value gap. I'm anticipating higher prices, but I would have liked to have seen Asia low being taken, but that was the change in the state of delivery from this morning. Moving through this 1 hour BISI, potentially using this 3 a.m. BISI as support. So we said earlier, if price moves above this BISI and uses it as support, we could look to see higher prices. This was the high put in this morning. This is the hourly SIBI from displacement down. Just going to move this inverted fair value gap aside here. So this is acting as resistance, but we have to let the candles close. Just going to move this 3 hour BISI aside, acting as support. So look at our 4-hour candle here from 6 a.m. So here's opening price, open, high, low, and then let's see where it closes because it'll close at in 3 minutes. Potentially taking the high from this morning. So if we push above this SIBI, let's go back to the 1 hour again. If we push above this SIBI, then this level here would be the next level, and then into this SIBI here. Again, these are hourly SIBIs. So if price moves above, it uses this hourly as support. This high here is the next level, and then into this SIBI. $10 a.m. candle is now open. Open, low, high, close, potentially. Let's see if we take this high that was made at this morning. I'm going to remove this inverted fair value gap. It's no longer relevant. So potentially up into this SIBI here. Oh, good for you, Just USA. Good job. Targeting the 13th high. This high here, the 13th high. Good for you. Good trade. So yeah, so manipulation here, manipulation here, here and here this morning. With a bullish push up. So I'm gonna just wait patiently. I'm gonna look for the next macro, and then failing that, I'll wait for minutes to be released this afternoon with anything after like 2:45 p.m. range. Yeah, that was a tough one this morning with why I'm taking the low. That's one for the journal. Asian low. Yeah, that's a tricky one. Here's the 50% of this range, potentially look for a pullback and then a continuation long. pullback into here, and then a continuation. But it's better to wait for a 50% pullback. Potential pullback to this order block. So the first macro coming to an end, so we might see some price distortion until the next macro when there might be the second stage distribution higher. That's it. That was a tricky move. That was a tricky move this morning. But I think that's one for the journal where YM takes the low and ES and NQ did not. Unfortunately, this might be the kind of day where I just have to keep my chart open and as I'm doing other things, just keep an eye out for a reversal. So it looks like price will want to reprice up here. You know, we can anticipate when price drops really quickly that price needs to come back and redeliver in a fair and equitable manner. And we can have, when price drops really quickly on one side, we can anticipate high resistance liquidity on the upside. And I think that's what we're seeing is these move up and then deep retracement back and then move up and deep retracement back. This morning, nice push higher. And it was this BISI that was holding right here. It was just a quick wick down, take the stops, and then a really aggressive push up. Anyway, definitely one for the journal that YM took Asia low and the others did not. So I'll be looking for that next time. And thanks to Levere for pointing that out. And XMT, thank you for pointing out the 1 hour 3 a.m. BISI. These are things that you have to have on your chart and then test to see if price is going to respect or disrespect those key levels. And then wait for your whatever your model is. So yeah, so I remain firm on what my model is, and I'm still waiting for it. And it can be a little frustrating when you don't, you know, when you don't have a good trade for the week, but that's just the way it goes. This 4 hour, Levere. I mean, I have them broken down into the 1 hour just to make them more manageable, but basically, if we want to be technical, we could take it from here all the way down to here. This is the whole area where price is going to redeliver. And of course, if you just throw that on your chart, it's hard to manage because it's too big a time frame. Okay, that's a good question. So let's go back and I'll show you. Like, let's compare what a good entry was this morning and where it was tricky. So let's go down to the 1 minute. Here was the move this morning, and this was pre-market right here. I'm going to just take this off. I'm going to move this aside. So let's look at what a clean move is compared to what this morning's move was, which was really, it was tricky to find. So this morning we have price moving up, moving up, moving up. It came up. We had displacement down. We had a big push up into here, which took out all of this liquidity here. So what are we looking for smart money reversal? We are looking for, on the higher time frame, we want to see a purge of liquidity. Let's make this look a little nicer here. We want to see first a purge of liquidity. Then we want to see displacement away from that liquidity. Then we want to see a change in the state of delivery. We want to see an inverted fair value gap plus a fair value gap. We want to see a breaker, and we want to see an SMT in that order, in this order. This is what we want to see for smart money reversal. So let's look at potentially what that looked like here. Now this is on the 1 minute, which is fine. So let's start putting this in. So we had price come up, move down, come up, move down, and then take its final move up. We have nice displacement down. So our change in the state of delivery, if this is our highest candle here, this black candle, then change in the state of delivery is here. That is our change of state of delivery to the downside. Now we're looking for an SMT, or excuse me, we're looking for an inverted fair value gap. So we have one here. Inverted fair value gap, I'll just move this aside. And on the smaller time frame, if we had a 30-second, we would likely see an inverted fair value gap somewhere between here and here. We just can't see it on the 1 minute. Same as the fair value gap we would see on the smaller time frame. Price displaces down, it comes back into this inverted fair value gap, and this is where we'd take the trade, right here. That's where we would take it. Now let's just say that we don't want to take it on the first movement. We want to wait for the next movement. So we're looking now for the next SIBI right here. Here's your entry right here. And then all of these SIBIs below. As we can see, that price delivers with really strong candles, like really strong candles. So this would be a nice entry. And then we had, did we have an SMT? I think we did earlier. It may not show now. Let's just take a look here. We may have had, I think we did have an SMT on the smaller time frame. So that is a smart money reversal. And then your terminus would be, your first terminus would be could be these lows here, and then with a runner down to Asia low. But you're going to overlap market open, right? So you have to have a plan for, do I hold it through market open or do I not? If I'm holding it for market open, I'd want to see like 50 to 100 points already in the bank, because your stop loss would have to be, you'd have to give your potential trade like enough room to get through a volatile open, right? So stop loss would be above this high. If you entered off of this SIBI, your stop loss could be maybe the SIBI above it. Price comes down, works back up, back into the SIBI. That's another entry here. This is a nice, this is a safer entry. And then here's your London low, here's your exit. You could hold for Asia low. So that to me is like, it's clear. You can see where the inverted fair value gaps are. You've got clean displacement, a return to an inverted fair value gap or BISI. That to me is a clean entry. If we compare and contrast that to this morning, so let's go down on the 1 minute. and we're down here and we go, okay, let's just say that we feel confident that this is the manipulation, and I didn't. I'm looking for change in the, I'm looking for change in the state of delivery. Yeah, 1 second. Okay. So here, if we decide that, or we're pretty sure that this is the manipulation and using this fair value gap as the area that price wants to come to, take out all these stops before moving higher. So I'm looking here, and the previous low is kind of here. I want to see another low here. I want to see an inverted fair value gap in this area, and I really don't have one. I really don't have an inverted fair value gap. Even if I go up to here, we're seeing balanced price ranges up here. Now, if we're looking for the first fair value gap, we still don't even have one. Like here we have wicks. We still don't even really have one. Now, let's say we're looking for a change in the state of delivery. Well, here's our low. So our change in the state of delivery would be technically this candle up here, which is way, way up here, right? So this would be a change in the state of delivery to the upside. Probably if we were on the 30-second or 15-second, we'd have some sort of fair value gap or inverted fair value gap here. So price displaces away, comes back into that fair value gap or inverted fair value gap. And then this is where you would take the trade. Here, you could have also entered here with a change in the state of delivery way up here. So let's say you weren't feeling comfortable with that. You could wait for the next entry, which would be here. This is a BISI, obviously. Price is moving so quickly that even if you liked this BISI up here, you really don't have an entry here, and then it was gone. So this is a tricky entry. This is a tricky entry. It's not one that I would have been comfortable taking because it's not clean. I want to see like really nice clean entries. Then I have a little more confidence in the trade. So anyway, that's just a comparison to the trade that was earlier this morning that was a lot cleaner. Again, depending on what your strategy is and what your rules are, but anyway, something like this, I'm not going to take this trade because it's not really clear to me. And when there's a really, really clean, clear trade, you just feel so confident about taking it that it makes these unattractive for me. So Polder Snack, I hope that answers your question there. This is an entry here, if you're a scalper and you think that there's room to run, could take an entry there. I would want to see price come down to the 50% at least into an area of value. So we're now at 10:29. The next macro starts at 10:45. This is, again, between the macros, we're going to see some price distortion, and then we might see second level distribution of price. So we could see price, come above here. We could see price come to the 50%. We don't know. We don't know where point B is going to be. But Levere, let's go to, so I'm going to move this over here. Levere, let's take a look at your 4-hour that you're talking about. So for on the 4 hour, really this SIBI here is from this high down to here. It's huge. That's why I break it into the 1 hours, because 1 hours for me is manageable. I know. I exactly, Poltersnack. You don't know where to put the stop, but I guess if you're a scalper, and I know that we have some scalpers on here who might be open to giving some of their input. Um, you just have to know what your risk management strategy is, and then you just stay within that risk management. So if your strategy is, you know what, um, if price pulls back into here and then we see a push higher, my stop loss according to my to my trading plan would be maybe at the swing low of the third candle that makes uh, the fair value gap. But for me, I would be looking for to the next level, which is the order block. So to me, price could have come down like right down to here. This would be something that makes sense to me, a level that would make sense to me. But when price comes down to either just the top of a fair value gap or the consequent encroachment and then show an immediate rejection off that, that's a very bullish, like price is telling us it's very bullish, right? It doesn't want to come back down here right now, but it could come right back to this order block here. So again, if this is your scalping strategy, which would be a fair strategy, then you'd have to say to yourself, out of 100 of these trades, keeping my stop loss at an RR that is within my trading strategy, then out of 100 of these trades, could you get 60 of them? Because that would give you profitability, right? If so this is the way you need to think. It's not just a one-off, right? Like you have to think, when I take 100 of these trades, what percentage of those are going to work in my favor? And so your journal would show, okay, I took 100 of these. They were in the top 50% percentile when price moves up quickly. And then you'd have to take a look and see, well, what's your success rate with this? Maybe it's 50%, maybe it's 60%. And then you'd have to be super strict on your 1 to 2. So if we just took a long here, so let's just take a look. If we were to take a long here, we enter, let's say at the 50%, right? So we take a long and we say, okay, I'm going to put my stop loss at the bottom of that third candle that makes the fair value gap. And let's say I want a strict 2-to-1. And then my stop loss, if I'm taking a 2-to-1, I would want my stop loss to be no more than a 1 RR risk, right? Because you don't want to potentially lose 2 RR to only make 2 RR. Your stop loss has to be at a 1 RR or 0.5 RR with the potential to make a 2 RR or even a 3 RR. So there's a 2.5 RR. So you have to have that you have to approach it that mathematically. And then you compare 100 of these, right? You need 100 of these in your trading journal to see what the results are. If this is your model. Okay. Anyway, Poltersnack, I hope that's helpful and approaching it from a mathematical. So this is not emotional. This is not, I feel like price is going to go higher. If this is your model, then you need to approach it this way for 100 trades and you need to document, does this work for you or not? Okay, this next question, Frank, Louisa, do you have any tips for how to recognize a market structure shift on a higher time frame? Yeah, 100%. Example, you watch on the 1 minute chart. How do you recognize market structure shift on a second's time frame? So price is fractal, Frank. So let me just clear this stuff here. So price is fractal, meaning that, and let's just define here for a second, market structure shift, change in the state of delivery, and chalk, which stands for, somebody remind me what chalk stands for. They're all basically the same thing. I switched to change in the state of delivery like 18 months ago because change in the state of delivery gives you a slightly better entry level than a market structure shift. So market structure shift is generally a swing low below current price. So if current price is here, let's just say if current price is here, okay, let's just take this stuff off. If this is your swing high, then a market structure shift is your swing low. So a good swing low would be down here, right? This is your swing low. This would be your market structure shift, technically. On a change in the state of delivery, we look for the highest candle that makes the high, and then we look at the previous opposing candles. It's either a candle or a series of candles. So if our black down close candle here is the high, then change in the state of delivery is at the top of this black candle here. So this is your change in the state of delivery to the downside. So you can see that your entry is always a little tighter than a market structure shift. It doesn't matter which one you use as long as you're consistent. And if you want to check out the differences, if you go to T-Trades, the YouTube channel, he has very technical, and he has PDFs on market structure shift, CHOC, and change in the state of delivery. So if you go to T-Trades, you can look up all three and then decide which one you want to use. But all of them, if you're going to use market structure shift, then use that consistently. If you're going to switch to change in the state of delivery, then use that consistently. And it's the same on every time frame. So we're on the 1 minute here, and you know that you're only on the 1 minute if you understand where the hourly is. So let's go to the hourly for a second. Let's go to the hourly. Let's take off all this stuff here. First, let me take off all this stuff, and let's just look for a change in the state of delivery on the higher time frame. Let's look at it on the hourly. Let me take out all this stuff. Change in the state of delivery. I'm just going to take out all this stuff right now, just so I can see things clearly. Okay, so we established on the 1 minute where the change in the state of delivery is. Now let's go to the hourly, which is, I spend the most amount of my time on the hourly. Now, if I'm looking for a change in the state of delivery, let's just get rid of all of this stuff here. Equal highs, I want to keep that up. So there's two places that you can look for. So you can look to your 1 hour candles over here. And I think I showed you guys, this is what it's called. Just go to the tick magnet, higher time frame candle overlay. And you can put as many on your chart as you want. I want the 4 hour and the 1 hour. So if you're looking for the 1 hour change in the state of delivery, you can look to your right and maybe just put it in here. So here are my two candles. The higher one is right here, although we don't have a swing high yet. Okay, so I'm just using this as an example. So say this is our high. My change in the state of delivery would be the candle or series of down close candles that preceded this push up. Therefore, my change in the state of delivery is at the bottom of this candle. So you can put this change in the state of delivery to the downside on your chart on your 4 hour. Okay, or you can work on your working chart and you can say, okay, change in the state of delivery. Price would have to come below here and break and close below. So I want to emphasize that it has to be a close below. But see these three black down close candles? They are responsible for this push up. So this would be a change in the state of delivery to the downside. Okay, now let's take a look at, let's go to the daily. Okay, if you're trading on the higher time frame and you're waiting for price to break structure to the downside, so here we are on the daily, we have, I want to look for the swing high. So the swing high is here on the daily. And so a change in the state of delivery technically is right here. It's the candle that was responsible for the last push up. So this is your change in the state of delivery, but on the daily. And you can do that for the weekly, the monthly. I mean, I do that on the higher time frame, because when we break structure on the higher time frame, that's really, really meaningful. So no matter what time frame you're working on, you're looking for the market structure shift, change in the state of delivery, or CHOC, which is change of character, change of character. That's what it is. They're basically all the same things. And I've used all three, but for the last 18 months, almost 2 years, I switched completely to change in the state of delivery. So hopefully that makes sense. Yeah, change of character. Thank you. I had like I haven't used that one for so long. The most important thing is liquidity on the higher level, and a purge of liquidity is the most important thing. Levere is absolutely correct. Change of character, thank you. I mainly use Zeusi's market structure shift. I'm pretty sure Zeusi uses change in the state of delivery, but I could be wrong. If you guys listen to, just put their names up here, TJR, change in the state of delivery. If you listen to, I'm pretty sure Zeusi is changing the state of delivery, but the other fellow who trades very similarly to the way I do is, I'll think of his name in a second. Yeah, Levere, yeah, for sure. You know, on the higher time frame, you need to be looking at the daily, the 4 hour, and the 1 hour. I like the 1 hour on my chart because the 4 hour is such a large area to cover. I just want to think of this trader's name because I really like his trading style, and it's super, super similar to what we do, or what I do here, which is purge, change in the state of delivery, nice displacement, price comes back into the inverted fair value gap, take the trade. Um, I'll think of his name. I think TJR has a whole video on how he defines change in the state of delivery. And I think it was because of him that I switched to change in the state of delivery instead of market structure shift. Whatever you use, it doesn't matter what you use, as long as you use it consistently and then track your results consistently, right? If you keep flip-flopping, then you're going to get different results. Vladimir. Thank you, Vladimir. Gosh, I just want to think of his name. Anyway, I'll think of it soon, but something to be aware of. Just figure out who your favorite traders are, and then figure out if they're using change in the state of delivery, CHOC, or market structure shift. I don't think it really matters as long as you know what you're looking for. Let's just go back to the 4 hour here. So Vladimir, if we're looking at the 4 hour, we're really looking at everything from here to here. This green candle here, all the way down to here. This is the 4 hour. This was the big drop, right? This is the whole area that we're looking at. So you can either put this on your chart on the 4 hour time frame and then take your maybe quadrants, put your quadrants on there and then just watch your quadrants, right? Because we're going to see, price working through each quadrant. If this is, uh, you know, if this is where IPTA wants to go back up to these highs. I like to I like to put them on the hourly just because I think they're more manageable on the hourly. But basically, oh, that's nice. That's nice, Sharka. Yeah, SIBI, fair value gap, whatever you want to call it. So yeah, so you can break it down with your fib into manageable, but it's all the same thing. Again, on my chart, I like to have my 1 hour set up just because it's a little more manageable. But it's whatever you like to see on your charts. So this for me is the hourly here. Hourly here. Justin Weirlin. Oh my God. I don't know why I couldn't think of his name. Do you guys follow Justin? I might not be pronouncing his surname correctly, so forgive me if. So Justin Weirlin, if you follow him, so he uses this strategy. I have a few more things that I want to see. Like I want to see an inverted fair value gap plus a fair value gap. He only wants to see a SIBI. Let's say if we're looking for a bearish move, he wants to see an SMT just like I do. Uh, as far as I know, he's not committed to time, whereas I'm committed to time. Like I have a few more confluences that I'm looking for. But if you check out Justin Weirlin, he trades almost identically, like literally almost identically. And he uses change in the state of delivery. So different traders. I think Scarface. So if you watch Scarface, and he's great for scalping. He's another one with change in the state of delivery. So it just depends who you're watching. I think if you watch, there's two really good traders, Mulhand and Solomon King. Put them on here. Solomon King is a fantastic trader. Solomon King, I believe he uses market structure shift. So you're going to see different traders using different, systems. But if you go to T Trades, you can look up all three of them and then determine which one you want to incorporate and just understand the character of each one and what they represent. And I believe Michael Huddlestone uses market structure shift, I believe. I don't think I've heard him use change in the state of delivery, but I could be wrong. But anyway, these guys for sure change in the state of delivery. Where I showed the one fair value gap. On the 4 hour, Vladimir? Yeah, on the 4 hour, we're going to see bigger. We're going to see bigger. So we're in the second macro, and let's just see if we get a push to the next level that IPTA seems to want to go to. I'm just going to put it on the 5 minute because okay, yeah, yeah. Polter Snack, he talks about it in terms of order blocks. Yeah. On the 5 minute, this is an order block here. Just change that to maybe a different color. I use order blocks, but not as much as I use fair value gaps, to be honest. Order block. So when price closes above this down close candle, that's an order block. Change in the state of delivery for me is, so right now, see this green candle with this high wick? That is our swing high. And so change in the state of delivery would be the candle or series of down close candles that push price higher. So this right here is change in the state of delivery. If you were using market structure shift, you would be down here at the swing low. That would be a market structure shift. There's another trader, I'll think of his name shortly. Now he has a slightly different approach. He uses change in the state of delivery, but he only uses the last down close candle. So let's say there were 3 candles in this range. He only uses the last down close candle. He doesn't take the range. So that makes his change in the state of delivery really like much, much tighter than me. And he takes trades as soon as he gets a candle closure below change in the state of delivery, he enters the trade. Now, he's obviously taking way more trades per day, than me, and maybe he's more of a scalper. Um, I can't say because I don't watch him enough. I've just watched him enough to know that his change in the state of delivery is very tight. And as soon as candle closes above, he's in the trade. He doesn't wait for an inverted fair value gap or a fair value gap or for price to return. He's taking that trade and he's just putting a 2RR trade on and then he's out. So that's his unique or whatever you want to call it. That's his style of trading. So for instance, if we were to look down here, so this candle here, this black candle here, this would be the low. And so we would look for the green candle. This example is not so clear. Let me look for another example. Let's look at this example. So we have a series of down close candles, and then we have this push up. His strategy would be, his change in the state of delivery would be above the first black candle. The first candle. Now you can see there's 4 candles here. So my change in the state of delivery would be up here because this is a series of down close candles. But his strategy is he only takes that first candle, change in the state of delivery. As soon as price closes above here, he goes long. And I can't think of his name. I'll think of it. But that's his strategy. So everybody has their own strategy. Everybody has some form of strategy, that they've done their back testing, forward testing. They have something that they trust. And it doesn't really matter what your strategy is. It depends on the trader who can stick to your rules, stick to your risk management plan, and be able to execute without emotion. You see it, it sets up, That's your setup. You take the trade and you make sure that you have your risk management strategy in place. You hit your max daily loss for the day, you're done. But you have to be able to have that type of discipline. But other than that, whatever strategy you choose to, whatever makes you happy, whatever works for you, you just have to stick to that strategy. Who is it? Honey Badger. I'm trying to think of his I'm trying to think of his name. It might be I'm gonna just throw this out there. It might be, is it Phase or um it might be, I can't think of his first name, but it could be this guy. I could be wrong, but it could be. He's a good trader and he's good to watch too. But Justin Weirlin is very close to very, very close to what I trade. TJR, um, his primary setup is on the 5 minutes, on the 5 minute. He's waiting for manipulation. And so he wants to see price come into a higher time frame. Then on the 5 minute, he's waiting for a change in the state of delivery, price to come back to the fair value gap, and then he takes the trade. So he doesn't have as many confluences, I guess, as I do. Uh, Sorry to hear that. You know what? It happens, right? But just know what your risk management strategy is, and you trade that, and then it's not emotional. It's just a business decision. And the biggest thing here, it's not your strategy, it's how you are as a trader. Honestly, it really, really is. And if you keep changing strategies for the next shiny thing that comes along, you're never going to get really, really good at one thing. And my whole objective this year is psychology. I'm working on psychology because I want to size up in my the number of contracts that I trade with. So that's my focus for this year. I have my strategy. I know what it is. I trust it. When I see it, I take the trade. Is it going to be perfect? No. Did I miss this morning? Yes, but I'm not comfortable with this. So I'm not going to make any apologies for that. So, you have to find something that works for you, that you can see, that makes you happy, whether that be scalping, taking a 25-point trade as a day trader, whether you trade London. That's up to you. But you have to be able to stick with your strategy and give it at least 12 to 18 months to get really, really good at it. Well, you're being a little hard on yourself because we all do it. Uh, we're traders. We're not perfect. You're never going to get it perfect, but every day just 1%, a little bit better, a little bit better. And journal that mistake, and then just stay committed to yourself, to your growth, to yourself, that you're going to do everything possible to not make that mistake again. You know, that's all you can do. You can't beat yourself up about it. I know all about that. I'm really hard on myself. It doesn't really do you any good. But just try and find an entry model that you've back tested and forward tested that you trade, and then work on your understanding of macroeconomics, microeconomics, and just cut down on the number of trades you're taking. Like, honestly, over trading is the biggest suck of a trader's life. Well, yeah, okay. Like, none of us have ever taken a stupid trade before. It's all right. You got to put it in the books and just move on. You just got to move on. It's just the way life is. So, guys, that's it. It's like 11 o'clock. I didn't get the move from this morning. That's fine. You know what? We live to trade another day. I am going to keep my I'm going to keep my chart open and see if after the release of minutes today, if there is a clear smart money reversal. And it would have to be super clear because I don't like trading the afternoons. And other than that, we've got news tomorrow morning. So I'll be back tomorrow morning and we'll go from there. But just stop taking stupid trades. That's like the number one thing. And just focus on 2 or 3 well thought out trades per week and start there. These traders who've been trading for 8 to 10 years, like they've had a lot of time on the charts, right? And they may have 2 or 3 models that they're very comfortable trading. But until you have at least one good model that you can rely on, that you can trade and trust yourself to only trade that, over time you can add a few more models to your repertoire. But until you get one good model that you can become profitable with, just stick with one and stop looking for the next shiny object. Green, game over. Yeah, Sharka, you've been pretty committed to Scarface's opening range or 5 or 10 minute. I can't remember which one you trade, but you've been like at least 8 months on that strategy. I know that. So kudos to you. You know when you can trade, you know the session, you know what you're looking for, and you're only going to get better when you're focused on one thing. So, okay, guys, that's it. Like I say, I'll be looking for something around 2:45, that macro at 2:45. And if I don't say anything, I'll be back tomorrow morning. Other than that, thank you for joining me this morning. Thanks for your input. Thanks for sharing your wisdom. And I'll see you tomorrow. Bye for now.